Hey, everybody, what's going on? Thank you for joining me. It's been a crazy morning. We had job numbers, which should affect what the Fed is saying, right? We had earnings come in. What is it? AMD missed, but they're up. Airbnb crushed it, which I'm going to talk about travel and leisure shortly, and they are down. Okay, so I know the market is there to manipulate you. That's why hopefully you're here. I was part of that manipulation for a number of years when I worked for a couple of hedge funds, institution, and two banks. Okay, I'm here to share my experience of the way they manipulate the market. All right, so there's a lot to talk about this morning. At 8:15, job numbers came out, right? ADP, they were strong. They were estimated at like 195,000. They came in at 239,000. Now, manufacturing job numbers were down. Travel and leisure job numbers were up. But the point is, how is the Fed going to process this job report? And I'm going to talk about the Fed in a minute. Now, what's happening is here's what's estimated for the Fed to raise rates by March. 200 basis points. That's what they're looking for by March, 200 basis points. So if they do 75 today, which is a given, that leaves 125 basis points through March. So we're talking about December. I think there's a meeting in January and probably in March. They probably skip a month. I think it might be February or something like that. Then they're also already have it factored into the market that come next year in the second half, so quarter three and quarter four, the Fed is going to reduce rates by 50%. That's already baked in. That's what the estimates are. So they're saying 200 points increase by March, 50 basis points decrease second half of next year. I mean, that's just so effed up. It's like when they used to tell us the market was going up, but it's actually going to go down in the long run. Remember, analysts were saying, yeah, we could see a bump to 400 and then it's going down to 350. I mean, they're here to screw with your minds. Okay, so that is the Fed. Now, what is everybody looking to say? And we're going to talk about the SPY and what's going to go on in the market today and my positions and why I'm nervous, but not so nervous. So I'm going to get to all that. But here's what people are looking at. So if the Fed comes out and they say, and here's the thing, sorry, we're heading into recession. All right, there's a shipping container company, Maersk, M-A-E-R-K, whatever. They're like the largest container. They say demand is down. Manufacturing demand is down. We are headed back into a recession. Things are going to get uglier. So we all see it, but we're having this bull run in the market. So I'll tell you both scenarios before we're done today, why I could be bullish and why I could be bearish. And then you decide on your own if you're bullish or bearish. And you could be both. You could be both because it's determinant on what the Fed is going to say. So if the Fed comes out and they say job numbers were strong and they focus on job growth, that means they're going to be aggressive. Now, if they focus on inflation and they say inflation's coming down and we've got a good hold of it, that means they could be dovish. If they talk about next year in quarter three and quarter four, which people already have 50 basis points decline on interest rates baked in, if they go, okay, well, we're already thinking about quarter three next year, we're thinking about raising through March of this year. So it really is determined. Now, again, futures were green, they turned red based on the jobs. Now, if you break down the jobs report, travel and leisure was up. We already know Airbnb is reporting good. We already know airlines are doing quite well, okay? I mean, they're holding their own. We had COVID scares. Numbers are back up. Business, not so much. But that section of the market, not so bad. Las Vegas Sands, Wynn Casino, Carnival Cruise Lines, right? Up day after day. Got me. What's also part of the Dow? Energy. Energy keeps going up. However, big money is selling energy because they're scared that the president is going to impose a tax. Okay? Nothing's really been discussed publicly, at least to my knowledge. But basically, if they do that, they're going to take, a big chunk of earnings from all these oil companies and energy stocks will go down. All right. But if oil pricing goes down because we're heading into recession, it's kind of like a catch-22. So I don't actually think they'll be able to tax these oil companies. It would be crazy in my mind. Okay. So we spoke about 50 basis points coming down second half of next year. Okay. We spoke about recession. Now let's talk about China, okay? Because it's crazy interesting to see what happened in China. Chinese market threw up for a couple days. Then a rumor came out by two different banks there saying that China is going to meet on Friday and relax their COVID restrictions. Because let's remember, China was good again, And then all of a sudden last week, I'm like, hey, COVID lockdown, COVID lockdown, COVID lockdown. Tesla factory showroom, right? The showroom in China, lockdown, not happening today. It's locked down right now. So China came out and then they said the two people that claimed that China was going to relax their COVID policies soon retracted that, okay? And then China came out, but I still think they should, or that they were coming up with a different COVID policy. If they do not, China will be in lockdown, okay? Chinese economy will get hurt. The European economy is hurt already. We're headed into recession, or we're hurting because our manufacturing numbers are down. So, I mean, yeah, if they want to screw the country, screw the economy. Now, the Fed doesn't really care about the stock market, but I've got a crazy conspiracy theory. With elections coming out, midterm elections on Tuesday, right? And does the Fed really want to be that aggressive and confirm everybody's belief today? Now, they could do it next month. They could do it in January. Do they want to do it today and crash the markets? Because we're going to get into the prediction, the bull prediction and the bear prediction very shortly. But if the Fed sounds extremely hawkish, it could be a severe downturn for the market. So let's get into the SPY, okay? Let's get into what I'm seeing. I spoke about Tesla, COVID, easing. Yeah. All right, SPY. SPY levels, we're sitting right at just under 385. 385 is a mainstay. I mentioned 385 and 10 cents if you're on my platform, because that's a very specific number to me. But let's just see where let me just add it right now. Okay, there we go. So let's check out the SPY where we are. Pre-market, 384.69. Now, what you could see, okay, I've got the 1 minute chart. So you could see the last 6 minutes of the day was selling. We were at 385.31. So what is likely to happen in the market when we start today? We're likely to bounce right above 385, in my opinion. That's where futures were. So that would be the open. Now, from 385, the psychology tells me that they're probably going to sell off the market. Now, I'm upset about that because I actually think they're going to buy up the market when Powell speaks, and that's just my personal opinion. I am still a short-term bull, a long-term bear. I think the market still has a little more to run before it retracts. That's my personal opinion. So the problem I have is if I'm incorrect, it's going to hurt my small account, and it's a small account, so I'm not sure if I should stay in the positions or not. I saw some movement yesterday that people were getting rid of a firm, which is one of my positions, towards the end of the day. But I saw some pre-market activity and I saw some other funny stuff that tells me, no, I'm going to stay and hold a firm. Why? Because a firm doesn't have earnings till next Monday. So it's a play on earnings that it runs up towards the end of the week. We saw a firm at $22, $21 the other day. Now it's under, $19 and change right now. So the play on earnings is that it pushes up towards its earnings period, plus Square and Coin have earnings later this week. And all these kind of stocks are tied together, and they're more speculative plays. And I can include like a Hood and Roblox, and you'll be like, those aren't even really fintech. Roblox, I mean, no, but they all run together. Same with like the Lucid, the Tesla. I saw some interesting calls come in on Nokia, and my other position is Lucid. So if the EVs run a little, so again, I'm just perplexed on what I should do with my small account. I'm going to think about it. I'll talk about it on Discord. I'll make a video specifically related to that this morning. If you want to join our Discord, you get 7 free days. So if you want to follow the challenge, it's there for everybody. Okay, back to the scenarios, back to what's going on. So the bull case scenario psychology is they were buying the market from early October. They bought up the market in October. Yes, 4 out of the last 5 days on the S&P and on the NASDAQ were down days, were red days, so 4 out of 5. So that's what a consolidation period looks like. A sell-off would be like if the Fed comes out hawkish and it could literally give back all of its gains from like the last 2 weeks. So I'll talk about the bear case scenario and we'll talk about the range and the SPY. The bull case scenarios, they sound less hawkish. They're still going to do some strong counseling and thinking about what to do, and they're considering X, Y. But if people come in and they think 25 or even 50 basis points in December, the market will push higher. The market has 75 basis points for November, 75 basis points for next month for December, and then it has like 50 at some point between January and March. And then again, The third quarter, fourth quarter next year, they're assuming their Fed's going to drop the rates by 50 basis points. They already baked in all the curves, which they do. It just seems a little ridiculous to me, but we already know our financial system is definitely manipulated. It was manipulated back when I was on Wall Street. I used to be able to force stocks down. And I made a video about it if you want to check it out. It's how I manipulated the market. But the point is, manipulations change. Okay. Now a lot of it's done with press releases, fake news, things of that nature. And I don't mean fake news like the election was rigged. I mean, they'll drop a story like, hey, this guy was insider trading. Hey, insiders are selling. They'll just highlight certain points. And if you're on Webull, I see it a lot. All these news stories that they they drop from Seeking Alpha and from all these other news places are always usually bearish, and they're usually paid advertisements. So when you're reading a press release on Webull or another platform, it's probably a paid advertisement. And you're going, oh, I knew I was going to be right. It says this right here. That's what I was thinking. All right. So bear case scenario for the SPY. Fed is hawkish. SPY is at 385 right now. Fed comes out. We're definitely going to see 378. Okay. There you go. Bear case scenario, 385. We're going to see 378. And that would be ugly. And then the latter support under 378 would be 375 and 371. That's bear case scenario. And again, that's why I'm worried about my position. If that happens, there's no saving my position. It will just get rocked. And what's going to happen when the Fed comes out anyway? The market's likely to tank, rebound. We always see this at 230. The market always rips one way, fixes itself, and rips the other way. So please be prepared. If you're actually watching your positions at that time, you're probably going to go from plus to minus to plus to minus. The deal is you want to get out on the plus side because who knows where it's going to end up. So if we get a nice spike at some point, I might look to exit my position. Now, again, I want to do a play on earnings, so it's a later hold for me. And again, I'll make an announcement on Discord. All right, SPY, bull case scenario. Bull case scenario is zoom out. What we've been seeing the past 4 out of 5 trading days is consolidation. Why? Because the Dow was up 14.5% in October. Tech was up 6%. Earnings weren't as bad as people said. And yes, forecasting sucks for some companies. For other companies, they're still in line, right? So that's the point. So there are so many different scenarios the way you look at the market. I see consolidation. I have to look at the bigger picture. And I know what moved the SPY from 363 all the way to 390. And that's a lot of money to move the SPY from 363 to 390. So I say to myself, a lot of money. So they're getting long-term positions. They're holding. So they're in their long-term positions. They're holding. And then people say, okay, well, the market's not going up any higher. We hit 390 on the SPY. I'm going to sell my position. So people are selling. 4 out of 5 days, people are taking profit from October's low when we ended September and went into October. All right, so bull case scenario, sitting at 385. Fed comes out, sound dovish, then they all of a sudden market makers decide it's going to be 25 basis points come next month and they'll worry about it next year. What would the market do? It would rip higher. So the next level is higher, which is a main focus. Just the same way I mentioned 378 on the downside and we're sitting at 385. The main level to crash on the upside is 390 on the SPY. We break 390 on the SPY, and I'm not saying it happens today, but I'm saying say the information is processed today, say the market likes it for some reason, say we close around 390, maybe past it, maybe not even. This, again, is bull case scenario. The next days, we're going to break that, and it would be 393, 397. Again, you have elections coming up, so there should be some hesitation in the market, and that's a bear scenario. Elections, bear case. Fed, bear scenario. Could be recession would be bear scenario, right? China closing, bear scenario. Job numbers, bear scenario. So yes, I am long-term bullish. I'm just cautious, okay? Cautious because the Fed and what the Fed says will totally flip the market one way or the other. So that's what we all should be focused on. Now, okay, if you have a small account, and this is probably what I'm going to do with my small account, but if you have a small account and you're unsure about what the Fed is going to say, then you shouldn't be in any positions. Or you should sell. Actually, when I mentioned the Fed's going to come out at 2 p.m. with their announcement and the 2:30 press conference, you're going to see some like this of the market, highs and lows. If you're stuck, you got to get out on one of the highs for your position. That's what I might do for my small account. Even if my small account, I still need to take the loss, but I get some type of spike, I might get out because it's safety. It's just what it is. I mean, they're going to give everybody an opportunity to get out, to hopefully take profit, maybe to minimize your loss. That's what I'm predicting. As far as what should happen leading up to that, leading up to it should be an inside day. Now, on an inside day on the SPY, which is narrow range, I don't see the market dropping before the Fed speaks. There's no reason. I also would find it hard to see it spike before the Fed speaks because there's no reason. And again, forward to the last 5 days, outflow, negative sentiment. So it's really based on the Fed. And again, when the Fed makes their announcement, the markets are going to rip up, drop down, go up, drop down. So if you're stuck in any position, you have a chance to get out. So that's what my plan is. As far as my personal investing today, what I'm thinking about doing, well, I just told you, I'm not really sure what's going to happen in the market. I think it's going to trade a narrow range. When the market trades a narrow range, what's going to happen is IVs will be eaten up, all right? You're paying for the premium. So you're going to lose the time up until the Fed talks. So if the Fed's announcement is coming at 2 p.m., I might look to trade somewhere around 145. 145, I'm still going to get that volatility into the Feds, and I can still look to secure profit. Now, even if my entry sucks and we see a drop all of a sudden, we're going to get that spike. So I might look for 10 or 15%. Now, if we see a spike right away, I might look for 25%. So I'll have an order in place watching the market. If I'm like, okay, it dropped first, boom, I will reduce my ask. That's what you have to do. So you always have a strategy. And I guess we'll go into a quick strategy session. That's my strategy today. My strategy is a complete strategy, and I'll tell you why. Again, I'm expecting the Fed to speak at 2. We know that's a fact. Fed press conference at 2:30. Fact. Takes people to diagnose the information. Fact. IV is going to be eaten up if we trade a narrow range during the day. Fact. So I'm going to wait till 1:30 to claim a position and follow a specific strategy, whether I think the market's going to dump. And if I think it's going to dump, I'm obviously going to get rid of my smaller positions. Okay. If I think the market is going to spike, I'm going to position myself well for that. But again, whatever the Fed says, the market will literally act crazy. So I'll either be looking for a quick 25% scalp. And again, if you put in a few $1,000s, let's say I trade my larger account, I take a $5,000 or $6,000 position, 25% is $1,000. I'm done for the day. I'm not one of those guys that kills it and says like, hey, I'm up 96,000 today. My account doubled, my account tripled. I want to grow my account small. I want to have a complete strategy. When you hop into a position and it goes against you, you're down 18%, your strategy is like, okay, shit, I don't know what to do. And if you actually think about sometimes either averaging down or selling your position at the same time, God, that's a flip-flop strategy. If your complete strategy, you're saying, I'm going to buy one contract here. If it goes down here, I'm going to buy a second contract, and my average will be in the middle. So I buy a contract for $100. It drops to 50. I buy a contract for $50. My average is 75. Okay. Maybe I buy 2 at 50. So 1 at 100, 2 at 50. That's $200. My average is 66.6. I know it's not going back up to $100. So I say to myself, if my average is 66, I just bought at 50. Maybe I'll get 50% gain. 75 is a good exit. So you go, okay, I make $8 times 3 contracts. I'll make $24. My original investment of $100 was losing $50 and then would have lost $24. But because I averaged down, so that's a complete strategy. If another strategy is I'm going to buy this 12% under the current bid. So the bid's $1. I'm going to pay $88 for it. That's it. I saved $12. And I'm going to put in a stop loss at 70. So that'll be my downside. My downside will be $17. My upside, I'll be holding for $1.25. My upside will be, $50. Complete strategy. Exit, stop loss, profit. All right, so let's just talk about if I see any real companies. I like to do this in the morning to see what some companies are doing. Again, AMD is extremely tricky. They missed. They reported forecasting down. It's up 5% pre-market. So AMD could be a pump. It could be a pump right before the dump because they've had 3 out of 4 outflow days. So I'm going to have AMD on the top of my list because if AMD decides to dump, that's just telling me the rest of the market will likely dump as well leading up. All right. Also, I've got Mara. The SPY turned ugly. My two positions are slightly green. Again, I want to hold them, but if the market gets rocked, my positions will get rocked. But right now, I'm going to hold those positions. I almost went into coin yesterday. It's up. Micron Technologies up. It had some outflow. So Micron should move with AMD. If AMD's up, again, all the chip players should move together. So if you're looking for a play and AMD holds its gains, Micron's a good entry, right? Pfizer, I'm interested in that. Pfizer's had a ton of inflow. 6 out of 7 days, was even up yesterday, 3%, 9% over the past month, which is strong. It's a rotation play. So that's like more of a safeguard. It's got to be institutions going to that. AMC, I always like to watch. It was down 7% yesterday. It's up 2% pre-market. Roblox is more of a spec play. Again, I included Roblox, Hood, Affirm, Square. They're all the more spec plays. Airlines are down 0.5%, which just makes sense because the Dow is down. Interesting. Energy is down. Not energy. Material plays. So these material plays have been bought up ever since bottoming, but have they really bottomed? So here's an interesting play. Could be a good long-term stock. Materials have beat up CLF, all right? Cleveland Cliffs. If you look at the chart, it was as high as $16 literally 2 weeks ago, $16.30, $16.50. It's trading at $13.35 right now and could easily bounce a whole dollar higher. And a whole dollar higher for a materials play, especially like $13.35, would be what, like 8% bounce? And I'm talking about 1, 2, 3 days. Market throws on itself, terrible play. Market is strong. I'm going to look to enter into like a Cleveland Cliffs, Alcoa, US Steel, all material plays, all should get hit hard, but show support because that's where the rotation's into. They've been so beat up. There's been a rotation from tech into materials, from tech into energy, from tech into medical companies like a Pfizer, like a Merck. Unfortunately, I'm seeing Square get beat up pre-market. Kathy bought a lot of Square. So here's another gauge for me. One of my positions is Affirm, AFRM. It's green pre-market, but that doesn't mean anything. I'm taking an L on it right now if I were to sell. So I look at the competitors, Affirm, Coin, even Mara, PayPal, and there are some smaller ones as well. And they're getting pushed down. That's why Affirm dropped right before the last 30 minutes of the day, is because there was some news on one of these other companies and they pushed the whole industry down. So again, that whole industry can bounce. Ken bought Square. He's on our Discord, Ken is, and he follows Square like it's religion, okay? And he thought that Square might run positively into earnings, which would be decent for Coin. Again, Coin has earnings again later this week, and they lose $1 billion per quarter. They're worth, the whole valuation of Coin is $16.4 billion. They lose $1 billion a quarter. So what could happen? They could come out and they could say, we didn't lose $1 billion this quarter. We cut this, we cut that. We're actually going to be net positive, XYZ. That would shoot Coin up, and that would be great for Affirm, Square, PayPal, all these kind of Pay Now or crypto related companies. It would probably be good for Hood as well because they're getting into that space. And there are a couple other spec plays. I mentioned Hood because you had a major investor take a position. I think Hood, I wonder where Hood is trading now. I'm so curious about that one. Hood, like Palantir, has demand. Just because it might not have daily demand. I mean, here you go. Here's a Hood demand. So you can see, what is that? 7 out of the last 8 days up. And it was even up yesterday, even though it was outflow. And it's at $12 and it was under $10. So they're buying Hood. I saw the same thing with Palantir. I mean, it looks interesting. PLTR, right? But I might be able to get in a better price. Again, they're buying it 4 out of 5, 8 out of 10 days. And yesterday was consolidation in my mind. So again, I'm going to hold my positions. I'm kind of comfortable saying, yes, I expected this from the market. And today could be not ugly, but it could be ugly for my small account. But here's the option. Here's the conundrum, actually, right? Got this small account. It gets ugly today. It goes down to here. However, Fed comes out, market reacts positively. Tomorrow starts out positively. It could be up here. Now, if I sell right here, I can't buy until tomorrow when it's already up here. So it's risk versus reward. It's kind of like Do I want to hold on to my strategy? That's why I'm going to make an announcement this morning. Hey, whatever positions you're in, if you want to sell and be safe, that's what it makes sense to do. All right, because things could be rough and your IV will be eaten away. That is my feeling. Your IV will be eaten from 9:30 until 2 p.m. Now, again, if you see something spiking, you can get a great position. You say puts at the spike, congratulations. Calls on the bottom, congratulations. But I can't call the bottom or top or pick a specific stock top or bottom before I see the market movement today. Oh, lastly, yesterday, pre-market, I mentioned yields on both my Discord and the live stream here. That's how I started yesterday's talk out. And yesterday, the yield on the 10-year pre-market was 3.95. And I'm like, I remember it was 4.07. Now it's 3.95. That's why the market's going to be strong. What happened? What did I miss? Yesterday morning at some point, all the yields and the US dollar went up, telling me the market was going to be bearish. And I didn't see it until like 4 p.m. when I'm like, holy shit. You know, the yields are up and they went up in the morning. So I should have got out of my positions. So trading journal, that was my biggest mistake yesterday. I came on, I talked about yields. I said that's what I use when I trade. And it is. I looked at the yields when I was trading and the yields were down. As soon as I entered into the positions, yields up, like literally probably like 5 minutes. That's the other thing I wrote in my journal. I shouldn't trade until 11 a.m. I always say I can see the market better. I see patterns better. My trading improves as the day goes on. If I trade at 2 o'clock, I crush it. So the point is, why do I trade early? So I wrote it in my journal. You traded too early. All right. Make a journal for every trade, every day that you're trading. I don't care if you have $10 in your account, $100 in your account. Doesn't matter. Make a journal. What did you do today? I didn't trade in the morning because I took my girls to school. I couldn't pay attention. Or I thought the market was going to drop at open and then spike quickly. So I got into calls on that first drop and then I sold right away. That was my strategy executed. There are people that like to trade at 9:30. I am not one of them because I like to have strategy. You could probably trade the opposite of however the market opens. If the market drops at open, you could probably buy calls real quick and scalp 20%. If the market spikes at open, you could probably buy puts real quick and scalp 20%. That's not the way I trade. But I'm going to talk more about that on Discord. Let me just see if we have any questions. You guys are more than likely to ask questions. Please, if you like my live stream, share. I do this every morning. Please, thumbs up. I haven't asked that in like months. And everybody else, I'll see you on Discord. But if you have any questions, trader chat, use the Flow and Algorithms channel. I'm going to make a posting in a minute or two about my small account challenge. Again, if you're not part of our Discord, 7 free days. It's right there. All right. See everybody later. Have a great day.